Good question. What was my biggest trading mistake and how did it transform my trading strategy? I'll probably say my biggest trading mistake for me personally was being too using too much of my discretion. Using too much of my discretion led me to a place where I could never understand where I was going wrong. I could never understand how I can evaluate where I was going wrong, and I can never understand what led me to either being right at times or being wrong. So and thinking about it now, which is why I'm a lot more mechanical now, why I'm using a lot more of a systematic approach, is just because of the way that I think. The way that I think is very much process driven. I need systems, I need routines, I need things to be in a certain order for me to perform. So being in a position where I've studied price action for so long and believing, you could say that, hey, I can read the markets and so on and so forth, which of course I can, but I didn't have any sample sizing. I didn't have a specific setup, a specific criteria, a specific design that I'm looking for, led me to, running around in circles, and which, traders tend to call the cycle of doom, which you keep learning and thinking that it will get you somewhere, whilst, no, it's not getting me anywhere. But once I learned to be a lot more mechanical, a lot more systematic, to be honest with you, that was the buy factor of becoming more mechanical, more systematic, more of having an understanding of what the hell am I doing and what am I looking for day in and day out for me to actually validate this setup, this design, this process as a potential trade for me. And that completely revolutionized my trading, which now puts me in a position where I know exactly what I'm looking for day in and day out. I can recognize the days where there is a trade opportunity for me. I can recognize the days where there isn't anything, and the variables don't change. They remain exactly the same, and it puts me in a position of ease, comfort, and actually giving me certainty in an uncertain environment. Yes, obviously there is always probability, but at least I'm in a position to recognize when I can perform and when I can't. Okay, one of the most misunderstood concepts in trading is potentially that you have to be right to make money in the markets, which is completely false, frankly. Being right and wrong has nothing to do in this game. Being right and wrong is a concept that obviously we use in, you could say, day-to-day living. Obviously, it's been drilled in our subconscious from when we were very young, from school and so on and so forth. But being right and wrong in the markets, frankly, does not exist. Why do I say that? We say that because we live in a world of probability here. We live in a world of possibilities and probabilities, but most likely probabilities. We want to work with stats. We want to work with events that keep happening over and over and over again. But the thing about trading, which takes away certainty, is that we don't know who's on the other side of the orders. It could have been a completely different trader yesterday than it is today. So you could have the perfect setup today and it will fail. It can fail. And you can have the same setup tomorrow and it will work. So if you go on with a mindset of I have to be right on every single trade, you're seriously going to damage your psyche and you're seriously going to damage your performance, because you're going to be extremely selective, therefore probably needing over confirmation, jumping the gun, or being a little bit too early in your trades, trying to believe that this is the right one. There's no such thing as the right one. You have to take every single trade that turns up. Now, when I mean every single trade, obviously a trade to your setup, a trade to your system, a trade to your approach, but you have to take each and every one of them. Why? Because in trading, there is a random distribution of wins and losses. What does that mean? you do not know which one's going to be the winner, and you do not know which one is going to be the loser. So out of the sample size that you take, you have to take each and every one of them to at least consider, or at least have a fighting chance in the game to be profitable in the long run. Okay, the top 3 trends that I see potentially shaping the forex market in the near future, it's probably greater adoption of AI. I mean, there's already huge talks about it. I personally believe that artificial intelligence or robots have been around for a while now. I'm hearing AI is a completely different version of like algorithmic trading and robotic trading and so on and so forth. I'm not very much versed in this subject so far, but I can already see how much of a trend it's built out, how much of a conversation it is right now. So I'm thinking that AI could be in a position to be the next challenger when it comes to trading the markets. The second one, I potentially believe greater adaptation of funding accounts, greater adaptations of prop firms and so on and so forth, being in a position to maybe, I think there's going to be a need for greater regulations, potentially, a little bit more back checks and so on and so forth to be done, because as we can see, maybe some firms' accounts out there are running Ponzi schemes, making it hard for traders to actually trust the trading industry and being in a position where they can actually make money long term. So maybe greater regulation needed to actually verify as prop firms or funding schools which put you in a position to actually make money. And probably the third one, I'm thinking it's going to be potentially, I don't want to speak too early, but we're entering a place where there's going to be greater look from a perspective of taxation when it comes to trading. Not too sure how, but I think that there is a incoming wave of potentially tax regulation in trading. And now we've obviously been aware that CFDs and spread bets is covered under the Gambling Act, you could say, in the UK, but things might be changing in the near future. Not too sure how, but I think that they might be coming for us as well. Absolutely. Risk management is extremely paramount. I'm gonna be brutally frank. I did not take risk management seriously until maybe year 3, year 4 of me actually looking at trading. That's the reason why I've blown plenty of accounts. Not because I didn't know how to trade, it's just because I didn't know how to risk manage. Now, I'm executing on the 1 minute. I don't trade the 1 minute, I execute on the 1 minute. Very huge difference there. And I believe that when you're coming down to the time frames like the 15, the 5, the 3, and the 1, it's all about performance. It's all about getting the best potential entry you can get. And there is a tool which has been available for years, especially in the meta quotes, as a meta quote product, which is called My Money Manager. And that tool, I'm not affiliated to them, so don't think I'm here promoting their tool and getting something back. And there's very similar tools out there which are exactly the same. But that tool costs you about, I think, $50. So about 40 quid, you could say. And that tool completely takes away the need of you calculating the risk, calculating, for example, if you're trading pound Kiwi, the pip amount in comparison to something like euro dollar to risk 20 pips. Those currency pairs have a different pip value. And imagine thinking of calculating all of that before entering the trade and being in a position where, look, you've got, in theory, a minute, potentially seconds before you have to make an executing decision. So I tend to use that, calculates all my risk in percentages or by equity if you need to, and it completely takes away the need of you thinking whether you're risking 1%, 0.5%, or 0.75%. You put that all into the tool and it does it all for you. Now, just to reinforce the fact, risk management is absolutely key. Risk management is absolutely key. And there's a major reason for that. Once again, we've covered it before. There is a random distribution between wins and losses. So if your risk is not the same, you're going to blow your account eventually. It's not gonna be whether you will or not, you will eventually blow your account. So you need to be in a position where you're risking the same size and you're risking the same amount all the time. Why? Because you need to protect your downsides, especially if you have a system which gives you asymmetrical risk to reward. What does that mean? Asymmetrical in the sense that you risk very small to make larger gains. So you want to be in a position where you're in the game for the larger gains. So if you're risking 2%, 3%, 4%, whenever you fancy it, and then when you take a big loss, you go back down to 0.2, 0.5%, it's gonna take you a lot of time to get back into the green. So you want to be risking the same amount, being in a position where you understand your risking parameters to then be able to really maximize the big gains, the big wins. So I once again recommend risk the same amount. If you're a newbie, if you're a beginner, you shouldn't be risking any more than 0.1%, frankly. You're there to study, you're there to understand, you're there to test. If you're intermediate, you start to maybe build a process, build an approach. Maybe you can move into the 0.2, the 0.5 region. Keep it very light. It's not yet about the money. You want to be in a position where you're gaining confidence, gaining faith behind your system, and then being in a position where you're trading it again and again and again and again. Once you've got those stats, once you've got that spreadsheet, once you've got that data, go up to 1%. Go up to 1%. I mean, obviously, it's always been said, 2% is probably the maximum that you should trade. If you want to know the background behind the 2% number, I think there's a book called Risk of Ruin. I'm not entirely too sure about the author. Just there, we'll probably put a screenshot of the book on this video. But you want to be in a position where you're not risking more than 2% of your account. If you're risking 2%, you gotta be a pro. You gotta really understand what you're looking for. You gotta really understand how your trading system works, and you really have to be confident behind every single trade that you take. So once you get to that place, do whatever you want. 2% at best. But I'm sitting somewhere between 1% now, 1.5% at best. And yeah, that's it. But be in a position where you're following the channel, subscribing, liking, and if you resonate, drop a comment and let us know. Take care.